What is going on, traders? Hopefully you're doing well. In this video, we're going to talk about what is the most important mindset a trader can have to create a consistent results. But first, I'm going to share with you my live trading today, so hopefully you're going to enjoy that. And after that, we're going to talk about what the mindset is. traders, so this was the market that we had to trade today, a slow consolidating market. And the market like this will a lot of time test a trader what he's really made of, because when a novice trader first discovers trading, he's really eager, he wants to jump the gun all over the place, he wants to make as much money as he can, which is pretty natural response. But the market like this will chop you into pieces if you're not careful. So I want to emphasize how important it is to be really patient. When you know, like, you're not really sure what's going to happen next, the best thing to do is sit on your hands. If you find yourself in a situation when you want to take a bunch of trades and you're not getting really the results you want, just remember it is okay to take a step back, take a deep breath, and just not do anything. Market's not going to go anywhere, and the professional traders know this, and they'll also know there's going to be one or two good easy trades throughout the day to make some money off. So you don't have to feel like you need to make money right now. It is much better to not make anything, because there's always another day to live. If you make a lot of mistakes, if you jump the gun, you will be really pissed at you the next day. Why did you took so many losing trades the day yesterday? Now you have to dig yourself out of the hole. So sitting on your hands is really smart thing to do, and taking one or two trades, you can make a comfortable living. I took one single trade right here, I didn't get filled right here, and I took a one contract right here because after 2.5 hours I was really starting to get really tired. But I wanted to show you guys how I'm taking the trades and how I'm trading. So I took this trade. There was a two-legged move down which I missed, but I treated this as a strong key support with the break and a new low. So this one contract at least paid for my commission. And the also trader took a screenshot and sent it to me how he traded yesterday. The trader was sitting on his hands for the majority of the session, and he took this one single trade right here. And take a look what a nice of a runner this could have been. Had the trader been jumping the gun all over the place right here, he probably would have had a bunch of mistakes, and he would not be in the right state of mind to take this nice trade right here. So remember, there are always going to be one or two easy trades that you will recognize, and you don't have to force trading. Every time you feel like you're forcing trades and you don't really know what's most likely going to happen, because you have a plan, you have a strategy, and you wait for high probability setups at the key entry points, and if you're really not sure whether this is the setup or it's not the setup, sit on your hands and just watch the market. You can go on sim and trade it on sim, but don't go all out on sim. You have to trade the sim the same way as you would trade it live. If you go on sim and you take bunch of trades, you take 20 trades, that's not really the way to trade the sim, because you need to learn skills on sim that will translate into live trading. So always trade on sim the exact way you would trade live. But enough of me rambling. The market started with the up move down, up down move, and this is looking straight out of the get-go as a trading range. So what we have to do, we have to find the highs and we have to find the lows, because this is what we are going to be looking for. We're going to be buying the lows and selling the highs. That's the rule how we trade the trading ranges. We're also going to draw the shortened trend lines, because they will keep us on the right side of the market. You guys can see we have a move up. We don't have a new high after the break of this trend line, and that's okay. That a lot of times happen in very early overnight session when the volatility is still low. So in the overnight session, there's a bunch of fake outs. This is why I always recommend the earliest you want to start trading is like hour and a half before the US stock market open. You have a one leg down, pull back, second leg down to a new low. Perfect price action. First entry short, pull back, second entry short at the key entry point. Now the tricky part today started. We traded above the EMA and then we went into this consolidation. So how are we going to trade this now? Because we want to wait for lows right here and for the highs right here, and we're not getting there. We're just in the middle of no man's land, and the best thing to do is not trade the middle of trading ranges, because you can get chopped up very easily. But why did I take this trade right here? Well, it is because as the market is working up and down, the EMA is in the middle of those bars. I'm sitting on my hands because this is the middle of trading range. So I'm playing the trading range rules. But as we keep going higher and we keep going lower, this may also end up as a small trading range inside of this trading range. And we may go on like this for a pretty long time. So I switched the rules from this bigger trading range to the smaller trading range. Now remember, I don't want you guys to start trading trades in the middle of trading ranges. From this point on, I was still sitting on my hands, but as we continue working sideways, we had a new high right here. We have a first entry long, pullback, second entry long. The second entry long at the support at the key level, high probability setup, nice big bullish bar. This is why I like this trade for a scalp, and we had a massive bullish rally. Also, what I did, I measured this leg and I was expecting a break higher, because every time you trade higher into trading range, you're expecting a breakout higher. Every time you trade lower into trading range, you're expecting a break to the downside. So this is how you are trying to predict where the breakout is going to occur. This is not a hard stone rule written in stone, but it is pretty accurate. And you guys can see how we're trending higher. We have a push higher above EMA, first entry short, pull back, second entry short. I tried to get in, I didn't, I missed the trade. I tried to sell the resistance, but from this point on, we're really starting to make higher lows each time, and it even looks like there may be a little bit upward bias into this. You guys can see that each new high is higher than the previous one, each new low is higher than the previous one. So this is looking like a spike and a channel movement, sort of. So this is why I wasn't really feeling like taking any shorts right here. I have marked this trade because this is a failed break out of the trading range, and I didn't like it at this point on because there's such a strong bullish move up higher, and we weren't even close to this upper resistance. You guys can see that I initially had it right here, and you are far away from here, and even if you pull it a little bit lower, you're still far away from this. But nevertheless, an aggressive trader can take this, and this would be a losing trade. It would, I think this is a calculated risk, but the fact that we are making higher highs and higher lows each time, and this is looking like bulls are starting to prevail, and we broke out higher, you really have to be patient. Now we have a little bit more safer setup. We're working sideways, we trapped everybody in, instantly reverse down, strong bearish signal bar. We finally touched the resistance. Even if you have it right here, we finally touched the resistance, and then we push below EMA. When you're afraid to take the trades at the very highs or the very lows, the higher low setup or lower high is the safer entry. Notice how we push below EMA, and this is a breakout pullback pattern. You break out, you pull back, and EMA is holding, trend line is holding, and the resistance is holding. A triple confluence, and this is a lower high of this setup right here. So this was the safe trade to take. A price is pulled back lower, you have a break and a new low. I treated it as a strong support. It was a nice bullish signal bar, quick easy scalp. There were the two-legged move down. There's the second move down. So after you have this two-legged move down, you're expecting some sort of setup to go long here, because you have these lows right here and you're playing the trading range rules. You're selling the highs and you're buying the lows. So you want to avoid selling from this point on. So you're expecting for prices to reach these lows. We barely touched the low. You're working higher. You have a first entry short, pull back, second entry short, but you already have a break and a new high. And if you have a break and another new high, I don't think it's smart going long this early when you already have a break and a new high in the middle of the trading range. You're getting very close to the middle of the trading range here, and I think you want to avoid this. And for some reason, the market just sold off in the middle of this trading range. Strong bearish depletion move down, and we finally have a failed break lower. This is what we were waiting for. Unfortunately, this bar is probably way too big to enter, and we would not have gotten filled here. It just would have went without us. But this is the idea. You want to trade the trading ranges. You really want to wait for these failed breakouts or sell the highs and buy the lows. You really want to do what's in your power to avoid trading in the middle. Even me thinking back like this, I probably should have avoided trading this. But we were going sideways for such a long time that I thought we may go, for rest of the day. But you have a failed breakout, you have a first entry long, pullback, second entry long, first entry short, second entry short. A lot of people are trying to sell this market at the second entry at the EMA when you're going off the lows and the downtrend already played out. So they're going to be trapped, failed second entry short, reversal pattern, EMA is holding prices, and the market is working higher. So remember, just stick to your plan. There's always going to be one or two good setups that you will recognize. They are going to be there. They're going to be really easy setups that almost every trader can see. So there is no point in chasing the trades. There's, market is not going anywhere. You will make a lot of money tomorrow. Just don't push it. And hopefully you guys had a good trading day, and you sit on your hands through this chop. So I'm gonna wrap it up, and I'm gonna see you guys in the next one. Take care, everybody.